Good morning, everyone, and welcome to this Monday live webinar. How is everybody doing today? Are you guys okay? Did you have a good rest on the weekend? I hope so. Nice. So we are ready to start our analysis here at MarketMinds Mastery. For people who join us for first time, we do market analysis on a daily basis here at the channel. So let's start with the euro US dollar. What actually happened last Friday, guys, is that the price, it's still trading within the CPI range event, and the CPI is still trading with a non-farm payroll price event. So everything, it looks like kind of ascending triangle formation as you see here. Let's zoom in a little bit. Maybe you're going to see it better. Now, actually, this is an ascending triangle formation, but again, everything is very messy here. Majors actually this time they don't show any directional move. That's why it's a bit of frustration around these events. So what it might gonna be useful, guys, to keep an eye on, it's gonna be the USD Canadian dollar. Why? Because the Bank of Canada, let's bring the calendar here, guys. Oh, sorry for that. The Bank of Canada will report consumer price index tomorrow. Expectation is to see a higher number, and a higher number usually leads to a strengthening in the currency. In this case, that's what we are expecting to see. Today, no major news events in the US. Let's get rid of that. So back to the chart. What we expect to happen here is if the price will find some resistance somewhere and break to the downside, and if the CPI by the Bank of Canada will help for the price to sold off, then we're going to see a directional move here. Okay, so that's what am I looking to see. Pat said, new here, want to learn more trading experiences. Many people, they said, just passed by. Low, greetings, I'm here and ready to live stream. Welcome, guys. It's a pleasure to have you on the live stream. If you have any questions, please write them on the chat box. USD JPY, here it's an interesting one. USD JPY, the price actually made a high at this point here that is higher than this one here and that one there, so created this pattern. We expect the continuation of this pattern because the market now is on a daily chart, looks like it's in an uptrend, so we can go to the lower time frames and try to trade it accordingly. Like if you like to trade hourly time frames or 15-minute charts, Maybe you want to see higher highs and higher lows. Maybe you want to trade some pullbacks. Maybe you want to trade something else. But as long as the direction, you pick up the direction right, and as long as you place your stop loss in a place that if the market takes your stop loss, it means there is a change in the direction, then that's a good way to trade actually. Nick said, first time here, would you please give me guidance? Yes, of course. On said, is this beginning? Yes, we just started actually, just a while ago. Pound US dollar, sorry, pound Japanese yen. The price is trading above the previous swing high. If by any reason the price moves lower, there is a strong support here that consists of the Fibonacci 61.8%. Let me show you on the chart. So let me show you how to trade the trends. Once you identify that the market made a new high, likely we will see an uptrend. Is that clear, guys? So if we're going to see an uptrend, we want to trade in the direction of this uptrend. So there are few tools in technical analysis we use to trade uptrends. One of the two is the Fibonacci retracement. So you can draw the Fibonacci retracement, let's say from the last swing low to the most recent high, and we can mark the 61.8%. Do you see here the 61.8%? So we can mark this area here. Now we can get rid of the Fibonacci tool. So in this area here, we will be interested to take some long positions. Now, what's the significance of this area? The significance of this area here is that it consists with these highs. You see, everything is at the same level. So there is another factor that confluence here, which is great. Then, if you plot some moving averages like this one here, this is the 20-period moving average, and the price touches the moving average, it's another factor that confluence to this that it can strengthen the buying pressure at this level here. And the last one we want to see is the price action. If the price moves lower and in this area by the end of the trading session, maybe it's going to be a daily chart, a 4-hour chart, hourly chart, depends what are you trading. By the end of the trading session, you want to see a rejection at this area. Maybe it's going to be a hammer, maybe it's going to be a bullish engulfing, whatever. Okay, something that shows price rejected. Now, in other case, maybe the price will takes off from here. We can't do anything. If the price takes off from here, it took off. What to do? It is what it is. Okay, that's all what we can do. Nothing else. That's why we create a plan and we try to trade and of course stick to our plan. Okay, guys, that's how we teach at MarketMinds Mastery. Now, next one, Euro JPY. On this one here, the price came very, very close to this support, and that was, as you can see, I already marked it with S1 support and the 61.8 FIB. And how I'm planning to trade this, simply on the 15-minute chart. I was looking before this candle here, I was looking for a retracement, but now I will change my bias, of course, and the FIB has to go up there. So I will be looking, I'm looking actually to enter long at this point here, the 61.8. I'll wait for the price to come down there to show some price action setups. And yeah, if everything looks good, I will take the trade from here. So that's the Euro JPY 15-minute chart, intraday setup. And yeah, maybe it can give us a good trade today. Why not? But always we start our analysis from the higher time frame. Preferably we want to get the direction from the daily chart. Okay, ideally that's what we want to do. Next one, Canadian dollar, Japanese yen also is it's a good pair, maybe it's a good one to take some positions in anticipation of the news. So this one here, it has a price range of 77 pips. If we add the indicator that calls average true range, we can check that the average range of this market, it's about 100 pips. So on a daily basis, based on the last 14 periods, is trading roughly on 100 pips. So if we enter long at the high of the previous candle here with a stop loss there, let's measure how many pips we have. So if we enter long from here and we put a stop loss below there, here is about 79 pips. So the reward to risk is favorable. Okay, the resistance is up here, the next level of resistance. So there is room for price to move and give us at least one-on-one by the time it will might going to visit the resistance. So that's a very very promising, I would say, high probability pair. So we can keep an eye on that. Last night I hosted a webinar for a private group of people, and we went through the indices, especially the S&P 500 as well as the US 100, and we did a fairly good analysis on that. What's the significance with this one here, guys? Price makes higher high, and the indicator makes lower high, and that's called divergences. Also, this divergence has a name. It calls a B class divergence because the price is making a double top. Price doesn't make higher high and the indicator lower high. The price makes equal high and the indicator makes lower high. That's why it's a B class. In the first scenario, it would have been an A class, and that's much stronger, of course. But again, the point here is the price moves upward at this point. You see this black candle looks like the price, it pushes upward, and the yellow candle, it shows that indecision on Friday. So if the price makes a new high and it snapped backwards and traded beneath the low here, that might set up a tone for some move to the downside. So you can, if you're trading indices, you can keep an eye on the S&P 500. Pound US dollar, the price gapped with about 30 pips this morning. If you see on the 15-minute chart, it started from there. It gaps with 24 pips. So that was a fairly strong gap actually at the open. And at this point, price is congesting above this moving average. again, it's very confusing to do estimation of what might going to happen on the majors, because you see that the price it's not trending, it doesn't have any direction, like even 2-3 candles in a row to show either bullishness or bearishness to give us direction. There is nothing. Okay, market is drifting within this range, inside to inside. So we are waiting either for a breakout above the highs here or a break below the lows here. Either way, we will be happy to trade. Okay. And the gold, yep, let's check the gold. Gold is promising and favorably a move to the upside. Price on Friday finally made a higher high here, higher high, and it made a higher low. So on the lower time frames, you're going to see an uptrend. Today, start trading higher. You see the black candle, it's a bullish one. So on the 15-minute chart, here it's a pattern that is developing. I just spot it right now. So up, something like this. So if the price breaks above here, then we might gonna see some bullishness, retrace back to this area, maybe takes off. Or if the price breaks below here, I will wait for the price to retest this area here. But ideally, to trade in the direction of the higher time frame, we want to see the price break to the upside. Okay, guys? WTI, sellers, they took control at this resistance last Friday, but this resistance, so the price action occurred at this resistance, it's after, it's within, actually not after, it's within a sideways move. A sideways move, within a sideways move, actually, the price is absolutely random. So the candlesticks, they are not high probability candlesticks. If this shooting star printed at this point here, or at this point there, or at this, like this one here, that would have been a different story. But a shooting star that occurs within a sideways environment, it's not a high probability setup, guys. Okay. German 40 daily chart, that bearish engulfing from Thursday, it didn't, this one here, it didn't move the market anywhere. And now the price on Friday, the price traded within that. Today the price made a higher high. Again, it's very, very messy here on the daily chart. There is no clear direction, to be honest, to say that we're going to start looking for long positions. Let's say the best way to play it, if you guys are looking to trade long on this one, is to trade, for example, the break above this high here. Okay, actually this is the swing. So if the market is going to break below this swing, then yeah, we're going to look for shorts. There are some supports visible here, this one. But if it's going to break to the upside, then ideally we want to trade above this high. Okay, not just here to start looking for long position, guys. Australian dollar, US dollar, a bearish pin bar occurred below the 20 period moving average. It's easy to come back to this chart after 2 weeks and say, you see, it was below this one here, up, it was below this one here, and we have traded to the downside. But again, in real time, we have to understand that we are retail traders. We are not the market makers. We don't create the price moves, and we want to find high probability setups to trade, and not the other way around. I think we cover pretty much everything today. The euro crosses and pound crosses, really, they have nothing. As same with this crosses with the Australian dollar, New Zealand, Canadian, and the Swiss franc. I believe for the rest of the day, we will stay focused on the Japanese yen pairs. On the majors, maybe for the London session, we're going to see some push to the downside. I don't know in the New York session if traders they're going to keep pressing lower. So far, starting from the Asian session, the market moves upward in general. Okay, not only on the Australian dollar, US dollar, but in general, the market moved upward, and then it gave back all the move. We can see it on the 15-minute time frame. So what started here, right at this point, price move upward, and then it started moving lower. There is room though for the price from this point here to move all the way down there to get some orders. All these gaps there are good because the volume here, price is just falling, and the volume is very light. Therefore, if the price is going to move upward, it will push the price all the way at this resistance. Okay, so yep. Gold, yeah, we just analyzed the gold. We talked about the gold, guys, that the price makes higher highs and higher lows, as you can see here. Guys, are you comfortable? Can you answer this question? Use the chat, type it on the comments below. Are you comfortable with the black and yellow candles? Are you okay with that? I hope you understand when we say that the black candles are bullish and the yellow candles are bearish, without having any confusion. Okay, otherwise I'm showing you something and maybe you're going to think about something, you're going to think the opposite, or you will understand the opposite. Just to clarify, the yellow candles, I use them for bearish, and the black candles, I use them for bullish price action. Okay, great. So gold weekly chart, price rejected the 10-period moving average. That's the same with the 50-period moving average on the daily. So back on the daily, price makes higher highs and higher lows. Looks like it's trying to push upwards. If we look on the lower time frame, like 15-minute chart, here it's a pattern created at this point. So we have 4 points here. We can draw our lines in 3 minutes. This bearish candle, maybe it's going to end up as a bullish candle, who knows. But if you are looking to buy, here we can trade the pattern, and we can buy above this high with a stop loss somewhere below the low. Or if you are aggressive, you can put the stop loss somewhere in the middle, and we're going to look forward to get 1 to 1, 2 to 1, however you feel, whatever you feel comfortable with. All right, guys, that's all for me today. I would like to thank everyone for your participation in this webinar. I wish everyone to have a fantastic day ahead. Trade safe. Okay, markets maybe today they're going to just move a little bit crazy because volatility maybe not going to be there. They are digesting the moves from Friday, from Thursday. Price, especially the majors, are trading within small ranges. So let's be patient and see what's going to happen. So I will tomorrow, maybe, no, we're going to have a live tomorrow. Yep, that's all good. So happy trading, everyone, and I will see you tomorrow at the same time. Bye.